I'm joined now by Anthea Gardner. She's managing partner at Cartesian Capital. Thank you for coming, ma'am.
Absolutely.
Sanisha Packirisamy, Chief Economist, Momentum Investments. Thank you, Sanisha. And Bianca Botes, she's Director, Citadel Global. Thank you for coming, Bianca. Sanisha, let me begin with broad macro numbers from your side. The initial reading I got was that the market was disappointed with two things. One, the widening of the deficit at the macro level, and then secondly, the increase in the indebtedness and also the peak at which that's going to happen, 75% of GDP, and then also the lower revenue collections. Let me get your views.
Thanks so much, Godfrey. So yes, there was, initial market disappointment on the back of the numbers. And if we look at the consensus figures going into the budget, it looked as though we had a range of forecasts out there, but the numbers definitely came on the more bearish end of what consensus was looking for. And I think why the market was so disappointed is that most of the fiscal ratios and debt ratios and the figures looked worse than what was expected, but also because there was still quite a large cash balance sitting on government's balance sheet. And there was an expectation that government could potentially utilize that in order to decrease issuance in the market. And that was also not announced. So I think that was just another trigger for the market to take a more bearish cue. If we look at the revenue assumptions, I think going into the budget, there was an assumption that the revenue shortfall for the current fiscal year would be somewhere between 10 and 20 billion. And what we saw materializing from National Treasury in terms of their projection is a 22.3 billion expected shortfall in gross tax revenues for this year. I wouldn't be too overly concerned on that number. Quite a big portion of that was due to a fuel rebate that's expected to come through, about 9 billion. And on top of that, there was a decrease in your imported VAT relative to expectations. And that was on the back of better energy supply. So there were fewer imports of those energy components. So I guess, there's been this decline, but to some degree, it's been because of good news in terms of the energy supply. And if we look at the overall figures, yes, the numbers do look worse, but given that they have these hefty cash balances, it does allow government to be in a position to keep issuance a bit more stable into the next fiscal year.
Fiscal buffers, the IMF calls them, right? We'll talk about that a little later. But I wanted to know your views as well on the broad growth numbers. The minister is projecting average growth rate of 1.8% in the next 3 years, 1.7% this year. The National Unity Government is saying we are looking at 3%. I mean, who should we listen to?
Well, look, Godfrey, I think, from the numbers that Treasury has outlined, especially if I look at sort of the next 3-year time period, and I compare it to what the market is expecting, it's there or thereabouts. So I wouldn't say that Treasury is, overly pessimistic or optimistic on those numbers, very much bang in line with what the consensus is expecting. So if you take the current fiscal year plus the next 2 fiscal years and average it out, Treasury is looking for real growth of 1.5%. The Reuters consensus sitting at about 1.6%. So very much in line with that. I think where we as a nation really need to focus on is on the longer term trend growth expectations towards the back end of the medium-term expenditure framework, because this is really where we're going to see the fruits being born of the economic reforms, where the energy sector reforms, where the logistic reforms are going to have a more meaningful impact is not necessarily on year 1 and year 2's growth figures, but rather further out over that time frame.
Okay. Am I hearing kick the can down the road? Anthea, your view in respect to what the minister presented today broadly, she did use the word the market was disappointed.
Oh, absolutely. I think it's a culmination of a few things. I think at the moment, South Africa really is about optimism, and we've got the GNU, and we're looking for things to happen. We're looking, expecting the lack of load shedding to have some positive impact. And then so the numbers came through very disappointing. I don't know if we can blame the finance minister. It's not all his doing, I believe, Yeah. And so there are a few technical issues that we probably need to take into consideration. But generally, yes, market very disappointed. I think the finance minister seems to know exactly what needs to be done. There's no doubt about it. By the way, he's telling us where we're going and how he's wanting to do things. And so many like just the little interesting things, you know, so his 4 pillars, for example, he understands that, as he calls it, maintaining macroeconomic stability is crucial for South Africa. And unfortunately, it's been great watching like the post-GNU formation, optimism and the markets rallying. But there's no doubt that with that, we're going to need structural changes. And the way I see it is the GNU kind of are policing each other. But they're not aligned enough to come up with economic policies that will promulgate or promote economic growth, which structurally is exactly what we need. We need something that says where are we going and how are we going to do it. So for example, the first pillar, you know, the minister did point out that low stable inflation and sustainable fiscal policy, and he's spot on. That's exactly what we need. The question is, how does he do it? Or how does everybody in the cabinet or all people in South Africa work together to do it? There's a lot of reliance, in my view, on the private sector, which I'm beginning to think the private sector is getting a bit bored of this now. You know, we're going to call in the private sector and they'll save us and make everything right. Wouldn't it be great if, like China, we had a self-imposed GDP growth target? So they've got this 5%, which we all complain about every time they miss it. But we'd love to get 4.5% or 4.8% like they've got 100%. In China. And there's this interesting discrepancy that a couple of days ago, politicians or Cyril said 3%. And the action
hasn't said the same thing.
Oh, there you go. Oh, right. So they're in alignment for a change. But the reality is the Treasury has said, well, we're aligning more closely with the IMF. Let's hold them to this 3% GDP growth, because that would make really the biggest economic change. And then this budget wouldn't be such a disappointment every time.
So I had a chat earlier actually with David Makura. He is now head of political education inside the ANC. He has some interesting things to say about how the government of national unity works, but that story is for tomorrow. I wanted to follow up on you and ask, in terms of the things that you saw today, are you suggesting that the minister has dealt okay with the hand he has been dealt by the existing economy and existing policies?
Godfrey, I don't think that this is the budget for change. You know, the medium-term budget is like, let's just take the temperature of what's happening. I think we're going to have to wait until February to see like what he's implemented or what he's going to implement and how he's going to get us back on course. Because obviously we've swayed off course from the last budget that he wanted or that he was projecting. In
worse circumstances, it has to be said, that budget that he presented last year versus this year.
And when you say worse circumstances, we were in darkness, but our sentiment and the business sentiment wasn't great.
Absolutely.
You know, and now we've also got lowering interest rates. So was it really? Yeah, you're right. It was it was a lot worse last time.
100%. Okay, we're going to talk about the GNU and his input, because I want a specific question on that. And then I also want to talk a little bit about the inflation target question, because he speaks about, as you say, lower inflation being a key ingredient. Bianca, let me come to you. You know, a conversation of the show, you spoke about the fact that there was an initial sell-off from the bond market. So the disappointment is complete, right? Across all the asset classes.
Yes, so what we actually saw is we saw a weakening in the rand, which wasn't necessarily an enormous weakening, but there was a weakening nonetheless. We saw a sell-off in the bond market. We actually saw a sell-off in the R2020, 2033s and 35s. And we also saw quite a significant sell-off. The 10-year, yes. We also saw quite a significant sell-off in the JSE, as you mentioned earlier, close to 1% sell-off over there. But I also think it's important that we don't just go into tunnel vision mode and say, you know what, this market movement is solely attributed to the midterm budget policy statement. As we are aware, things happen across the world all the time. And while the midterm budget policy statement definitely filters into the sentiment when we start looking at South African assets, it's not the sole contributor or driver of the underlying asset price.
Got you. Okay, but at the same time, we had all been raised in the past, how many months, 3.5 months or so, on this optimism around South Africa. The Reserve Bank has cut interest rates and is expected to continue cutting interest rates. We have got a stable political environment underpinning the politics of the country. And then at the same time, we have got an end, if you like, to load shedding, even though we haven't reached the official date, which is, I think, February 2025. That's what the chairman of Eskom told me. So isn't it correct to judge the minister and say, in this budget, he's disappointed, and perhaps some of the projections that he's giving could have been better?
Absolutely. I think, one of the key things that we need to look at here is obviously the debt, the government debt burden that we are looking at. And I think that's been So
they've continued spending even though the money on the receipting side has not been coming in.
Absolutely. And to some point, you need to hold them account and say, okay, but when are you going to start taking more austerity-based measures?
Thank you. Fiscal consolidation. He's been singing and banging that drum for how long now?
For years, okay? Yeah. It's nothing new. We've been saying for years that we need to rein in fiscal spending. The wages, for instance, public sector wages, has been a contentious matter for years. And that hasn't really been solved. And yes, they are bringing policy to the table. And yes, they are saying, we understand this is an issue. We need to appease international investors. We need foreign investors into South Africa. But at the same time, they're not really tightening the belt as much as the market would like them to tighten that belt. And that is why we saw that sell-off in the bond market. That was purely a debt burden issue. Yeah. It wasn't a matter of, do we see structural changes coming through in the next year? Yeah. Do we believe in the GNU? Yeah. It was a problem of our debt position deteriorating over the past year.
Yeah, I wish I could ask the minister if there was any input in from the other members of the government of national unity, but you probably won't answer that question in any great amount of detail. Sanisha, I just wanted to come back to the issue of some of the misses that we saw in this budget from the minister. So he spoke about the fact that on the tax side, whichever way you look at it, whether you're talking corporate, you're talking individual, you're talking VAT, that was all down. And then on the other side, he then raised his hand and said, tell you what, fiscal consolidation failed in this instance. We have seen an increasing indebtedness, and it's a concern because he says it is the biggest single largest item on the expenditure side. And then he also spoke about, of course, the widening deficit. So in essence, he is saying fiscal consolidation failed. Do we bury it here, or would the minister be correct if we heard him next year saying we are going to try again and see if we can implement fiscal consolidation?
I can understand your skepticism, especially if you look at something like the expenditure ceiling, which we continuously surpass and then, set a new ceiling. I mean, the whole point of having a ceiling is that you don't breach it. And that was meant to be some kind of expenditure rule, self-imposed, that we put on ourselves in order to ensure that we can exercise more prudent fiscal policy. Earlier on, you mentioned that the Reserve Bank is now cutting interest rates. The reason that they probably can't cut much more than getting to the neutral level is because fiscal policy has run a little bit more loose than what we would have all liked. And that means that there has been a constraint on the Reserve Bank side of things, on the monetary policy side of things, in order to contain those inflationary pressures. If we look at the tax numbers that you mentioned, I think we could potentially see a little bit of a blip higher in your corporate tax revenues towards the end of the year. December is quite a big month in terms of when the result seasons come out. And in terms of the personal income taxes, we could see a little blip higher there as well on the back of the implementation of the two-pot system. You also mentioned a little bit around the debt numbers. Now, I think we also need to be a bit circumspect about that, because we're still expecting that the debt ratio is going to stabilize over the medium-term framework. In fact, it's in the next fiscal year where they see that topping out at 75.5%. Now, that's not, to say that that debt ratio is not extremely high. We did a quick calculation, and if you had to take the overall government debt pile of South Africa and you had to divvy it out against all the citizens in SA, including children, each person for this fiscal year would be responsible for 89,000 Rand of that debt. So it is quite a large number to contend with. But I think the fact that they're still managing to stabilize that number in the medium term shows an effort to fiscally consolidate over the medium term framework. I think one of the key tests to whether they can stick this out is going to be the public sector wage negotiations. And in the past, what we've seen is that government has taken a more tough stance to say that if you do overrun on your wage bill within your department, you then have to cut back within your department expenditures in order to get your overall number to the same figure. Now, I think that what we haven't really spoken about yet is that there is a negative consequence to that, and that negative consequence is a further deterioration in service delivery efforts. So there was a great chart towards the back end of the budget this year that basically showed us how we've seen service delivery decline as the demands on the public sector have grown. So just as an example, they looked at the number of nurses per 100,000 of the population. Just around the time of the global financial crisis, we had about 312 nurses per 100,000 of population. And if we go all the way to 2023, 2024, that number is now decreased to 269 nurses. And a very similar picture is playing out on the police force. So I think the real test is going to be how they're going to rein in that public sector wage negotiation. The other real test is how they're going to have a basic income grant that's a more permanent structure of the social relief of distress grant that's done in the best possible way in terms of being deficit neutral and not just adding to the expenditure demands on government side.
Yeah. I wouldn't want to be finance minister trying to run through all of those things, but 89,000 per person, including children. So if you take out children, this number looks horrendous. Anthea, pick up on any of the points that you like from what Sanisha was saying there. But I also wanted to put the point to you that perhaps the minister, what he has done in this instance is to take all the data, put it in here, and hopefully when we get to February, we're going to get a much better picture and outlook going forward. Because now, not only will we have I was going to say firing economy, but certainly from what you're saying, the numbers will be picking up on the revenue side.
I do like your optimism. One of the things that Sanisha pointed out was the social grant issue, and that's kind of on the wish list. Like, how do we change? So in summary, or to take it up to another level, how do we change what we have now, which feels like a socialist support system, into a spend where there's going to be growth? So all the things he mentioned about the Cape Town container terminals, Quebec, all those like little structural issues that he wants to grow, and he understands that you have to spend money on infrastructure and revenue generating assets if things are going to look better next year. That's where he kind of called in the private sector, which I'm a bit skeptical on at the moment.
It's a point I wanted to follow up, but go on.
I don't know. I don't know what's stopping him from doing it, is my point. We really need to change this expenditure in our budget from this very socialist, let's support and let's spend money on just keeping everybody out of poverty into spending money on
jobs.
Yes,
give people jobs. The private sector question, it's an interesting one, but let me bring you in, Bianca, very quickly and ask about the non-concern you expressed about the rand moving back a little bit from the best levels of the day that we saw earlier to where we are sitting at the moment. Are you suggesting that there isn't things in there that frighten you on a long-term basis, i.e. going back to my point I made to Anthea, that perhaps what he has done is to pack all the bad news in this budget so that come February, things will be looking much better?
I think you would be naive to say that there's nothing in there that doesn't frighten you. I mean, there's a lot of things in South Africa, especially from a fiscal perspective, that is quite frightening. I think what we should, however, take into consideration is that he has placed quite a bit of emphasis on developing infrastructure. With infrastructure development comes job creation, comes actually relieving that burden of social grants. I mean, if we just quickly look at the numbers, there's about 28 million people in South Africa on grants with 7.2 million people paying tax. It's unsustainable.
100%.
And I think the minister really understands that concept. It's not like he is completely not aware of it or that it just doesn't matter to them from a governmental perspective. I also think we need to understand that policy lags.
Sure.
Okay, so we're 100 days into the GNU, and if we ask ourselves...
Do you get a sense that the new members of the GNU have had any sort of singular input into this budget process for at least for this medium-term budget policy statement?
So the new Minister of Infrastructure, for instance, his words were, we're going to turn South Africa into a giant construction site. And you've heard President Ramaphosa repeat that. You've heard the Finance Minister repeat that. So I do think they are voicing their opinions, and especially in the departments that they are looking after. In all essence, they are the CEO of that department, and they have to have input in those departments.
Sure. Let's ask the Economist, because one of the points that the minister made in this budget is the creation of this vehicle that's going to be a blend of risk sharing with the private sector as they try to crowd in private sector money. Sanisha, I'm hoping that in your drive to Pretoria, coming back to Johannesburg, you were able to look at that one and assess whether it's feasible, or, I mean, they're saying this thing will only be operational in another year. Let's put it that way.
I think there definitely is merit in it. It's a credit guarantee mechanism. They didn't actually give a lot of detail around it, but what it's really meant to do is to de-risk the projects, and it also takes away from the contingent liabilities that are sitting on government's balance sheet. And so all in all, it's better for government. It does also allow for more private sector participation. There was a little line there in the budget that also said that government would like to get the private sector on board for their technical skills and expertise as well. So it's not really just the financing aspect of it, but there is also a realization that there needs to be some technical skills being transferred from the private sector into the public sector in order to grow, the economy through construction. Now, why construction? So they basically looked at the multipliers of the various industries in South Africa, and they said that if you spent R1 million in the construction industry, you could probably create between 3 and 4 jobs for people that have a matric or higher. Now, for me and my fellow panelists in the financial services industry, if we spent R1 million, we would probably only create about 2 jobs. So that multiplier that is associated with the construction industry is just that much higher. And that is why they want to propel the construction industry to really accelerate economic growth from that aspect of the economy.
Yeah, we never have enough time, but I've got enough time to get a view from each of you just in terms of the key takeaways. And I want to pick up on you, Anthea, because she is speaking about that construction side of it. And I'm thinking from a market perspective, does that perhaps have you lean towards those construction companies that have been unloved? How many years now? Almost 14 years. Yeah, because I remember 2010, right? Yeah.
We haven't, no. Of course we would if there was a catalyst, that's our job. So we're not emotional about this at all. Everything is pragmatic, and when we think there is a catalyst on the table, a lot of this budget feels like it was, he said all the right things, he used all the right words. I mean, Operation Vulindlela has been coming for how long now? And again, he mentions it, and infrastructure. They know what, as Bianca said, they know what needs to be done. Yeah. And until we see a catalyst, until we see structural change, we're still a bit nervous on South Africa. We love the fact that the market has rallied on sentiment, make no mistake. But I am long puts, let me tell you.
Oh, rallied long on sentiment. Bianca, your closing thoughts?
I think I agree with Anthea. You actually need to see the proof in the pudding.
Yeah.
I think next year, October, when we have the midterm budget policy statement and they need to recap on what they delivered to us in February and where they are, that will really be the true measuring stick in terms of what have we done, how have we changed. Yeah. And I think the budget in February will be really, really important in terms of looking for those policy changes that we are all looking for. Yeah. As Anthea mentioned earlier, the midterm budget policy statement is not necessarily to speak about reforms. Yeah. What are we going to do? How are we going to change it? Yeah. It's really just to say, this is where we were, this is where we are now, and this is how the two compares versus what we promised, what we delivered. Yeah. And now we go into the next promising phase.
Okay, so we must mark him harder come February.
Come February, definitely.
Okay. Sanisha?
Well, Godfrey, I think, there were some questions left unanswered. What's going to happen with the public sector wage bill? Are they going to be able to stick to their guns this time around? Will we be giving Transnet more money given their infrastructure woes and their railway capacity constraints? And then, of course, what happens to the extension of the social relief of distress grant to make it more permanent? So these three are big expenditure items that we don't really have an answer for just yet. And, the long sentiment argument, I think that's 100%. So looking at the rating agencies as an example, now I think they'll be looking for the concrete evidence of a consolidation on the fiscal side, of tangible progress on the structural reform efforts. That said, I think we are definitely moving in the right direction, and we are definitely seeing some of the fruits being born of previous economic reforms, such as the energy supply issue.
Sure. Okay. The sense is the can has gone down the road, but we have to catch it at some stage. Ladies, thank you very much indeed for coming through. Anthea Gardner, Managing Partner, Cartesian Capital. Thank you, ma'am. Sanisha, thank you. Chief Economist, Momentum Investment. Bianca, thank you. Director at Citadel Global.